Hi, I'm Joe Mager with Motley Fool, and I'm here because we had a great question on Facebook from one of our followers. How do I build a diversified portfolio of stocks if I can only invest up to $1,000 at a time? Well, that's a great question. It's really exciting that you're getting into investing, but just make sure you've got three things covered first. First is paying off credit cards. You shouldn't have any credit card debt. That'll kill you. Two, if you have a 401k program at work, make sure you're contributing however much that your company will match to, because that's just free money right there. And the third thing is setting up an emergency fund. I know it's not sexy and it's pretty boring, but you want to have money set aside, typically 3 months worth of salary, to cover anything negative that happens so that you don't have to sell your investments, potentially at a bad time, to cover a short-term loss. So you got that squared away. Awesome. You're ready to start investing. So this is a little blasphemous, but you don't need to diversify right off the bat. Well, I mean, you can, right? You want a lot of stocks, but you don't have a lot of money. But that's totally fine. Everybody starts somewhere as an investor, and you're going to build your portfolio over time. So when you start out, you want to buy enough that actually covers your commissions to where that doesn't eat up a lot of your investment. That's why I'd recommend starting with at least $500 increments when you buy. So when you buy your first stock, go out, buy at least $500 worth, and buy something you're comfortable with as an investor, you're familiar with, and you think you could own for at least a decade, so that you can sleep comfortably while you own it. Over time, as you get more money and you're able to invest more, keep buying in those increments and keep buying in different industries so that you're diversified. Now again, stuff that you're comfortable with, but in different spaces so that you're starting to get some element of diversification. Over time, you keep doing that. You keep buying great companies that you know and thinking about them for the long term, and you're setting yourself up for a lot of success.